Hello guys and welcome to another post-market analysis of Bank Nifty. Today is November 24th and this is the Bank Nifty chart on a 5-minute time frame. But as usual, let's start from our daily time frame. Okay, so here we have the Bank Nifty in a daily chart. So as you can see, we have this green support zone coming from past many days, which is there in playing a very good role from the last couple of weeks, and then we have this rising line, tentative trend line, which is where we have seen a breakout and also a decent confirmation towards the bottom. And from last many days, we have been talking that we should not be doing any trade in between this zone, especially on a daily time frame. So today, yesterday we have seen a break. Day before yesterday, we have seen a breakout from this support line as well, because we have, after this confirmation, we have a gap up opening and then seen a bearish candle, and then after that we have seen a gap down opening and seen a bearish momentum. And yesterday was some sort of flattish opening, and yesterday was the first day we have seen a bullish candle from the last many days, that is from November 12th. But today, we have also seen a gap up opening and we have seen a decent close above the opening, and that is why we are seeing a green candle here. Okay, so to talk on a daily time frame, yesterday we said that this level is going to be very important. If the market wants to go down, it has to see a close below that, and that didn't happen today. And we were talking that we should be able to see a close above that, and also a close above this line, for that is 43,000, that is 44,000 levels. Only then we'll be able to come to a conclusion that the Bank Nifty has changed its trend from downside to upside. So right now, because we have seen a daily candle close, getting closed into this area, we should be really careful within this zone. Either we have to wait for some price action there towards the downside if it is seeing a failure there, or we have to see a very strong support here in order to take it towards the upside, based on your previous swing highs. But as of now, we are seeing a kind of sideways market from the last couple of days. That is from the last 1 week or so. We have seen a couple of days going sideways there. We have seen almost a four bearish candle, and we have seen a two bullish candle, but still price is still within this range. So now the range becomes very important, and all these levels towards the downside are going to play a good support level. So only after breaking this with the proper confirmation, we can come to a conclusion that the Bank Nifty has gotten its momentum back. So that's it on a daily time frame. Now let's come back to our 5 minute chart and see what we can learn from today's price chart of Bank Nifty. So here we have the price action of Bank Nifty. So this green zone that we are seeing here is nothing but the support or resistance area that we have got from our daily time frame. So to start with, we have seen on every day we always say that, see, on a especially 5 minute time frame of Bank Nifty, these first five candles of Bank Nifty are going to be very crucial, because that is like a trailer for the rest of the day. And so see, today to start with, Bank Nifty has opened at 43,630 levels, and that is the bottom boundary line of this entire support range. That is an important level to watch. So immediately first candle was a bearish candle, and then we have seen a couple of bullish candles, which means that whenever you don't have a proper three candles in the same color of the Bank Nifty, I'm talking about the first three candles, then you have to be always careful to deal with such kind of price action for the rest of the day. So here, first thing what you have to do is we obviously have to wait for the swing high and swing low to form, so that will be able to draw a proper resistance and support level. So market has started coming from there, and this is the candle where we have seen a kind of a bottom rejection. This is not a perfect hammer because it has a long shadow towards the top, but then it is close to a hammer candle formation. Still it's not a hammer, but on the bottom side we have seen a huge rejection. And this is when we will be able to know that we are able to draw this line which is coming from yesterday's projection as well. If you see from yesterday on the left, we have a proper support area, intraday support level, which is holding even today, because we have seen this rejection candle. So whenever you see a rejection candle like that, we also have to draw a support area to the complete size of the wick, and that is how we are able to draw this support area. So now whereas from the morning, if you see, this becomes our that becomes your resistance area from the swing high that we have seen from 9:30, the candle, the range. So here we have, after drawing the support area, so now we have to wait for any candle confirmation. So now we have a strong, a very bullish confirmation here coming from the bullish engulfing pattern, that is from 9:55 to 10 o'clock candle. These two candles put together are called bullish engulfing patterns. So, and we also have another reason to this formation, to this confirmation, is this support area. So one thing is the candle pattern that is telling us after a downtrend that it is a bullish engulfing pattern, and also it has come at a very important location, that is this support area. So here, now the only thing that we are left with is to check with the proper risk versus reward ratio. So if that is your entry, this stop loss is exactly correct, and your reward is nothing but this line, because that is your first interaction, I mean the first hurdle towards your target. So your risk versus reward ratio is 0.8. But then if you notice, on the next candle after this engulfing candle, you have seen a candle coming towards the bottom till there. That is when you should make advantage, whenever you don't have a proper risk to reward ratio. In this candle next to that, 10-5 candle has given us that opportunity where your risk was less. And imagine you would have entered there, but you don't know, you would get a proper rejection there. So imagine you would have entered anywhere here, so that you have a proper risk versus reward ratio. So starting from this line, any entry below this would have given you a proper risk versus reward ratio, and that is what has happened here. So I'm maintaining that entry, because we have seen an opportunity to enter into this. So, and our first target is hit. We always say that whenever we have seen a first target reach on any chart, we would we should always get our stop loss from cost to cost, and that is what we should have done. And after that, it is all it is going to depend on your patience level. So this was your next target, and that target was hit. And now when the prices are there, you would have trailed your stop loss, and kept that as your stop loss, because that was your previous target. And now looking on the left, you can say that this was the next swing high. Yes, that was hit. When the prices are there, your stop loss would have been here. So like that, whenever you reach, whenever you are aiming for the next target, your stop loss should be just before that target. The previous target should be your stop loss. So in this case, this target was also reached. Now like that, you can keep trailing on the left side. Okay, so that was your next target. Yes, your next target was also reached. And then your stop loss, I'm not drawing your stop loss lines. We would do it when we see a close your situation. So that was your next target, even that was hit. And this was your, I'm drawing it from here. Okay, and this becomes your next target. And let's see, yes, even that target was hit. And next target was this. Yes, even that target was hit. And after this swing reaction, this was your next target. Okay, so let's see. Okay, we haven't gone there, but prices have gone till there. So when you are moving from this target to this target, your stop loss would have been this. Okay, so I would retain this line and then remove the rest of these lines. So I hope you have understood how to trail the stop loss. Excuse me. So yes, that was reached, and that means you've got exited there. So let's measure what was your momentum that we would have captured if we were in that trade. So this is showing 131 is really a very good momentum on a bank nifty chart. So if you are receiving 131 points, that's pretty good for the day. But let's see what has happened after that. See, after that, what has happened is we have seen a lot of rejections from up and down, and then we have seen market going sideways almost till 12:30. So whenever you see two reactions at two different places, that is when you should be drawing another trend line or a zone there. And also here we have seen, see, we have two needles touching this line, so that means we were able to draw that line as well. So what you should do ideally when the market is going sideways like this is to wait for the breakout from this zone. And this is the candle which gave us the breakout, that is 13 excuse me, that is 1 o'clock candle. So after 1 o'clock candle, we have also seen the confirmation candle, and we already have where we would have risked the amount what we have got from the previous trade, that is 131 points. So here if you see, this was given you a proper confirmation as well. So the only thing left is now to check the risk versus reward ratio. Yes, your risk would have been above this line, and your reward is this initially. That was your initial target. This is more than 1.5. So you would have taken that trade, and then we have seen a target reach that. Whenever you see that happen, you know what to do. You should get your stop loss from cost to cost, and then you trail from this line. So on the left side, if you see, wherever you see swing reaction, so that was your next target. Yes, this was your target that is reached. And after this, which was your next target, this was your next target. So even this target was reached. So after this, what was your target? Your target is this, because you have seen a rejection there. So obviously what has happened is, when the market tried to reach from this point to this point but then failed. So when your target is reached at this point, and when you know that this is your next target, your stop loss would have been there. So we would assume that you would have uh, taken exited from your position from this point. So this moment today towards the put side has given you almost around 79-80 points. So that is 130 here, and 80 points there is 210 points. Okay, so let me write down 80 points here. Okay, so now we are closely at a 200 points for this day. I will take off this, and I will take this off to avoid visual confusion on the chat. And then see, this is a breakout towards this support area, and then we haven't seen any confirmation here. Instead, we have seen a breakout going in the opposite direction, because we have not seen any confirmation candle there. And after this, when you know that this is an important level, after this green candle, if you see, this also has a green candle, that means that this breakout towards the top again is confirmation. But then here we haven't seen that. But what you should have do is, instead of analyzing like that, this, if you know what is a harami pattern or an inside pattern, you know that this is an inside pattern. You see, this green candle is right within the range of the previous red candle's real body. So now whenever you see that harami pattern after a downtrend, you know that it is a reversal pattern, but it is coming right at the close of it is very close to this particular line. So you may be skeptical, but yeah, those who are confident enough to take this trade would have taken. But we're not showing that trade, because it is it is having a bit of a risky closure here, considering this level. So after that, market has gone towards the top, and then after that, we really are not seeing any proper swing high or resistance areas. Okay, this is a resistance area, because prices are holding this area a bit. So you would have drawn an intraday resistance level there, and there you have seen a breakout of this at 310, but that was too late. You're not supposed to do any intraday trades after 240 to be on a safer side. So that's it for today. We have seen now 130 plus 80, that is 210 points for today. Okay, so which is pretty damn uh, good to see if you're crossing 200 level, or even 150 level on a bank nifty. So I hope you have learned something out of today's price action. I know many of you would take this video very light, because everything uh, is is offered at free of cost. But trust me, this strategy, what if you continuously watch our post market analysis video from the time we have started, or at least from the last couple of weeks, you know that whatever we are discussing is what happening every day. All you do is marking a proper swing high and low, and obtain a resistance and support areas out of that, and then wait for a proper candle formation, or a proper breakout, or a failed breakout. So don't think that because you're getting it as a free, it is not valuable. This is extremely valuable stuff if you start giving importance to it. So I hope you have learned something out of today's video, and thank you so much, and see you in our next post market analysis video. Thank you so much.